Welcome to our video tax alert. Today we're going to talk to you, the tax professional, about the new Form 8949 and all of the problems it's creating in tax season. I'm Sharon Kreider. I'm a CPA and an EA in Silicon Valley. I'm sitting here with Vern Hoven, who's a CPA with a master's in tax, and we're going to tackle the frequently asked questions about the new Form 8949. The first question that's come in is, are the revised Schedule D and the Form 8949 only for individuals? This CPA's software vendor is using the old Schedule D and D1 on partnership tax returns. So tell me, is this only for individuals that we're having this trouble?
And it is. The question is correct. So what we have is the D and the D1 is different for partnerships and all other entities. The individual is going to find the D1 is a total form, and the 8949 is where we used to put the D information. So absolutely, the 8949 and the revised Schedule D only for individuals.
All right, now here's the really scary question, and this is happening more and more to us as we get further into tax season. I have a client, a securities trader, who makes on average 17,000 trades a year. Oh, I know where this is going. So 17,000 trades a year. This isn't one trade where I could just put one line and be done with it. This is a person where I am supposed to put purchase date, sales price, cost of each one of those transactions.
And gain.
Holy cow, that's 70,000 entries. I'd be doing that until October 15th.
Of 2013.
Of 2013. This return is going to be late. So the question is, what are the reporting requirements? Or really, what are the options I have if I have a client come in with thousands of transactions and I need to make I need to get this out of my office sometime in a timely manner?
The instructions do give a relief provision, and you have to take each stockbroker's 1099 and essentially put it into a bucket. Is there basis and doesn't it have basis, and then short term and long term. Essentially, that's the concept. And for 2011, we're not going to have any long term. So you've got the three buckets, and then we can put total forms in those three buckets. So if we have short term with basis, and we have long term, well, we want to have long term with basis, and then without basis. In the without basis, I'm not going to cover why the stockbroker might have that wrong. So just take each stockbroker and divide it into the three buckets.
All right, so short-term with basis,
right.
Short-term without basis,
right.
Long-term without basis, because
right.
basis reporting right. doesn't begin until, except for purchases right. January 1st, 2011 or later.
So we got those three. Now you take the total of the short-term with short-term without, and long-term is without basis. You put the totals from the company. So maybe it's Merrill Lynch. You'll have three lines. Merrill Lynch, this is the total. Then maybe you have E-Scottrade. Then you'll have, again, E-Scottrade right underneath Merrill Lynch on those three forms. And so now what we have is we don't have to put each transaction. We just get to put totals per brokerage statement.
And then how do we tell the client that I had 17,000 trades in this one?
Well, the funny thing about it is that the IRS asks us to put it into the 8453 form at the end of the year when we're putting the signature forms in. So we just send the details along with that. So I don't know how you tell the client about that, but you tell the IRS about it by sending it in with the 8453. I'm not going to say what are the odds they're going to look at it. I don't know. I doubt it.
All right, so here's the question I really want to ask you. All of this hard work of getting more information in because of the basis reporting requirements, how much revenue is this supposed to bring in to the federal government because the IRS, the broker, now has to report basis and we have to reconcile basis reporting onto the new 8949?
That's a tough question. The purpose of any 1099, whether it's a B or anything else, is to try to get a third-party report to the Internal Revenue Service. And clearly this is going to prevent the shareholder from saying, I bought it for $9,000 and the stockbroker says $4,000. Now, the IRS is going to say, which one of the two of you is right, and prove it on it. So the 1099 is looking for unreported income. My clients aren't stealing from the stockbrokers. They got a third-party report already. I may have the basis wrong, on it. But I'm going to be very surprised when Treasury gives a report and says, how much unreported income from 1099Bs are there? No, I think that there's other stolen money, yes, but from the 1099B, I can't imagine we're going to do a break even on this, Sharon. The accounting fees are going to be more than what the revenue is going to be raised by the Internal Revenue Service.
Oh, I was going to answer that question about how much revenue this brings in with not enough.
Yeah.
So thank you for watching our video Tax Alert while we dream up some answers to the frequently asked questions on the new Form 8949.